Resume the sessions, and now we're moving to session 3, innovation activities led by regulators. We will have Carlos Goncalves de Almeida, Executive Sarper, Andrea Keenan as moderator, and the commentators Pedro Pinero from the National Confederation of Insurance Companies of Brazil. Let's introduce the first panelist, Carlos Goncalves de Almeida. He's an actuarial with more than 18 years of experience in life insurance, pensions, affinities, and property and casualties, including prices, financial statements, and local financial reports. He has experience in financial analysis of life portfolio. He has been a member of the Special Commission for Development and Innovation and InsurTech at the Superintendence of Private Insurance, head of the actuarial channel in MetLife Brazil, chief actuary Brazil Life Business, and in education he has taken advanced courses at the Escola Nacional de Seguros in Brazil, an MBA in Economy and Finance from the Sao Paulo University, and a degree in Actuarial Sciences from the Federal University of Rio de Janeiro. So we welcome Mr. Carlos de Almeida.
Hola, yo voy a intentar hablar.
I'm going to try and speak in Spanish. I like it a lot, but and translators will have a hard job, he says. So first, I'm going to refer to the technological revolution. Since all the discussions we've had here, Ignacio also mentioned that now they are starting to understand what actuarials say, but now we have to understand technology. And this is something that is a big concern for us.
Acá están las
These are some of the main technologies that we see in this technological change, and this is related to the InsurTechs and other markets as well, like Fintechs and others. Digital platforms, we have ITs, telematics, big data and data analytics, machine learning, artificial intelligence, robo-advisors, DLT, blockchain. These are many things. And technology is changing a lot. So how do we feel with reference to what is happening? How is this technology changing the way we do business? And these are things that happen every day, but I don't think we are following the pace. And when we try to accompany and discover what direction we're going to move in, I think sometimes we end up like this. I mean, everybody at the superintendency are looking somewhat like this picture. We have to regulate blockchain. Are we supposed to regulate APIs? Well, there are many things. And so I'm going to share with you what is the direction that Brazil is taking. And then about the future. We try to anticipate many things. When we say that technology is going to change the world, but how are we going to anticipate what's going to happen. And I think this is quite dangerous. Trying to anticipate technology. For instance, this is an example. 640 KB of memory in a personal computer is enough for anybody. That's what used to be the case, but now it's much more. 1 gigabyte is too much space to save emails. But if you use Google, you have 5, 10 gigabytes now. And they used to say in 2 years, the spam problem will be solved. This is from 2004. Who is this person? Who said that? Bill Gates. A person that is in the world of technology, has been there for a long time. He's not a newcomer. Another quote, I think internet is going to grow like a supernova. And then in 1996, there was a collapse. The founder of 3Com said that. And this is very good. Apple is already dead. This is wonderful. There's nothing more to say about that. That was Nathan, the director of technology of Microsoft. So I think that supervisory authorities need to be very careful when anticipating movements to avoid something like this from happening. The current scenario is described like this. This is the case of Brazil. This is the matrix. We have threats, opportunities, weaknesses, and threats, and strengths. These are the opportunities, for instance, increase of financial education. This is very important. If we increase financial education, the opportunity is to include emerging customers. The main objective we have today at the superintendency is this one precisely. Another opportunity, well, new products, cost optimization, and better prices. Again, better prices is related to inclusion of emerging customers. Alex mentioned today that the insurance market in Brazil was around 6.5% of GDP in Brazil. But it's 2.5 of the healthcare market. Health is something that everybody wants to have, right? A health insurance. But in other kinds of insurance, like life insurance or car insurance or home insurance, that accounts for only 4% of Brazilian GDP. So we want to increase that. About strengths today, in the superintendency, there's a very open dialogue with the members of the market. We also have a dialogue with other entities in Brazil, like CVM, that is like the Securities and Exchange Commission in the States, the Central Bank. And something that is key, I think, speaking of weaknesses, and that is the little knowledge of the new players within the insurance market. Who are these new players? InsurTechs. And what are we supposed to do in order to better understand how these new players are coming in the market? And the superintendency as it's a government body, goes through changes in quite a slow manner. Sometimes technology is very fast, very rapid, but the superintendency has to change so quickly, but sometimes it's not possible. Now I'm going to refer to the vision of the superintendency, the SSEP, thinking of the inclusion of the insurance. We have this three elements of the Innovation Committee. It's like we defined like three waves. The first is to understand the expectations of the representatives of the insurance industry. The second is to be aligned with other government bodies. And the third is to be close to the players, the new players, the InsurTechs, basically, and to understand how they're going to be inserted in the market. So, speaking of the first component, understand the expectations, we had to modify the insurance rules. Now we include the electronic contracts. Now the requirements are lower for electronic contracts. But I added some basic things here. For instance, the superintendency, the SSEP, just wants to allow the companies to conduct their business, but then they have to provide evidence that they did it in a way
Yo como cliente acepté o como...
I'm sorry, he's not speaking Spanish right now. The second is the confirmation of the documents. With electronic channels, it is important to confirm that the documents were received. There has to be a way to authenticate that the documents have been received. And now, speaking of the alignment with other bodies, now we are having conversations with the Central Bank and with Previc to conduct some joint actions. We still don't know whether we are going to carry out all the actions we are discussing, but we'll do our best. And currently, we are studying this regulatory sandbox that I'm going to describe later on. And the third element, being close to InsurTechs, well, we're doing this by having conversations with the technological companies and InsurTechs, and also technological companies that are not necessarily in the insurance market. So based on all these studies, now we are implementing the Subtech, that is like a electronic monitoring system for insurance companies. We are starting with an assurance for works, and we have all the data about capitals, premiums, and the claims in order to monitor both the acceptance of the risk and also conduct and the prudential aspect. So technology is also going to help us monitor the market. We have a very clear example of the technological regulation now, and this is about fintechs. Fintechs started first in the insurance market, and everybody thinks that, okay, now fintechs will play the role of banks. But will InsurTechs play the role of insurance companies? I don't know. In the financial sector, they conduct a basic intermediation, not only in the financial sector, like Uber, for example, Airbnb, they also act as intermediaries. But in the financial sector, it's very clear that technological companies have appeared to act as intermediaries. But it's a short-term business where they expect the profits to come very quickly. And insurance is a business that assumes risks. It's for the long term. It's necessary to wait for some time for the profits to come in a consistent manner. So what we see today is that technological companies are like orbiting around the insurance company by providing services, by changing processes, but they're not taking risk. Most of them, at least. Will this continue like this? We don't know. But some are trying to take the position of insurance companies. And that is where we see this question of the sandbox. The sandbox is something very important because it seems clear in many markets, but some markets, it's not very clear how this is going to work there. Why do we have to create new rules for the companies that come into the market? I think we have to understand what's going on, not try to anticipate so as not to run into trouble in the future, but we always have to be concerned about the solvency and the conduct of the insurance companies. So we need to understand the bottlenecks of the regulation. I mean, how can we be fast in complying with the regulation, but without stopping the technological evolution? As I said before, InsurTechs are like orbiting around insurance companies, and today they are operating as MGAs in the United States and in other places. So why not try and verify if this role as MGA is perhaps better fitted for InsurTechs? Now we have the peer-to-peer insurance. Well, after 3 centuries, the whole logics of insurance has changed, and now the theory of ruin is not applicable anymore. Well, no, that's not the case. We can't say that.
We cannot think in that way. And I can think of very example, that of lemonade, that has a very good thing to it. The change in how products are offered and the user's experience. But at the core of the business, this is insurance. And this, I don't think, will change that dramatically.
São os desafios
These are the challenges in the regulatory sandbox. On top of that, we would be needing a regulatory sandbox. This is what I wanted to present. Thank you all.
Muchísimas gracias, Carlos González.
Thank you, Carlos Goncalves de Almeida. We will now introduce you to the next lecturer, Ekrem Zarper. He is the lead manager of bilateral issues of the National Associations of Insurance Commissioners from the Executive Office of Washington, D.C., and a vice president of the Committee on Implementation and Evaluation of the International Association of Insurance Supervisors. He supervises and coordinates the bilateral relations of NIC with governments on behalf of state commissioners. He provides leadership and strategic direction on the potential impacts of regulatory problems and of global accesses. He promotes strategies using NIC's strategies and maximizes the influence of the organization nationally and globally. Additionally, he provides strategic support for the development and implementation of international regulatory standards in the International Association of Insurance Supervisory Board, the Financial Stability Board, and the Organization for Cooperation and Economic Development. As the Vice President of the IAIS Committee, he supervises assessment and monitoring of the implementation of basic insurance principles and the policy measures for insurers of systemic relevance. He provides strategic direction to the Secretary of IAIS in other issues connected to implementation. Before he joined NIC, Mr. Zarper worked as the International Trade Director for the Coalition of Service Industries and as a research associate senior researcher in the Stern Group. He has a degree in arts, in economy, and in French from the Kingston University of London, and an MBA on business administration from the University of Fairfax, Virginia. We receive then on the floor Mr. Ekrem Zarper.
Good afternoon. Thank you for the opportunity to be here today. I'm going to speak a little bit about the approach we have in the United States. And as noted, I'm with the NAIC, so we're the standard-setting body that really kind of brings together the state insurance commissioners. And we've been undertaking a lot of different activities in the U.S., so I'm going to present both the national approach, but then also talk about some of the individual state approaches. So let's get started. Okay, one of the slides is missing, but so innovation technology as well as consumer expectations are rapidly reshaping the insurance marketplace and increasingly disrupting the status quo. We all know that technology is moving rapidly and changing our lives in dramatic ways. As Carlos touched upon, things have changed over the last 20, 30 years, or even the last few years for that matter. In 1975, the fastest computer was as powerful as the iPhone today. Except the main difference is, in 1975, the computer cost $5 million. Today, it costs several $100s. We've seen sharing economy, drones, and autonomous vehicles as technologies where insurance products have had to adapt or emerge. We heard about peer-to-peer insurance. Telematics and the Internet of Things are all things that are disrupting the insurance industry. The challenge for regulators is really kind of how do you balance those critical consumer protections with the demand for innovation and the need for a stable, competitive, and fair playing field. policyholders' needs and expectations need to be considered within the context of technological advancements. And naturally, these lead to the introduction of new products. So our regulators are seeking a way to yes. But of course, they have to consider how regulations can protect the consumers at all times. Sometimes this is done without making any changes to existing regulations. Other times, we may have to find ways to modernize those regulations to make them more effective. And in the US, our regulators have been reaching out to startups early in the process to better understand the innovations in technology and the products being developed, so insurers can understand the regulatory landscape and regulators can verify insurers are following applicable laws and regulations. So, regulators have demonstrated a strong commitment to this endeavor. First, through the formation of the NAIC's Innovation and Technology Task Force, and also through the coordination and facilitation of numerous events and dialogues with innovators in both the startup area as well as incumbent insurers. The insurance regulators, through the NAIC, have connected with key players in the InsurTech arena. Just maybe 2 weeks ago, we had 50 insurance regulators attending meetings out in Vegas, InsurTech Connect. There was close to 3,000 different InsurTech providers who were at this meeting. And we had an opportunity for regulators and the industry to get together and kind of share ideas with each other. We're also exploring what are so-called regulatory sandboxes. And then similar to what SSEP is doing, we're looking at that and finding ways to lower market barriers where appropriate. And what we're seeing is that insurers are also investing in these various devices, like these Internet of Things devices, through innovation labs. They're learning the different models and methods being used to match the innovators with funding and incumbent insurers. And what we're seeing is that this investment increases efficiency, it improves the marketing, and allows more accurate pricing, which helps consumers protect their assets. Within auto insurance, the evaluation of risk has evolved over the years. Traditional rate classifications are easily understood. Age, gender, marital status, territory, and miles driven. Even with these, a few states are more restrictive when it comes to certain factors, such as gender or territory. But now we're seeing auto insurers move towards modern technology, such as telematics or usage-based insurance. And I think we heard about that yesterday in some of the presentations from the companies. And the most basic form of usage-based insurance is the miles driven. And this can be done either on the honor system, where you bring the car in, or through a system attached to your car, like what they call a dongle. And it records certain activities such as braking, speed, hard turns, time of day, etc. Then it transfers that information to a database, and then it can be analyzed by the insurer. So basically what the insurer is trying to do is take that data and measure the risk on an individual basis so that it can more accurately price that policy. The NAIC's Center for Insurance Policy and Research had a white paper on this a few years ago and covered a number of the major issues. But what we found is that most states are actually allowing this to be used. Of course, it's important to take into consideration that how there are concerns about privacy. How is the data being used? Does the policyholder have a choice on how that data is maintained? So, as a regulator, it's important to seek transparency and make sure that the consumer fully understands their score and how they can improve their driving and how they can lower their insurance premiums. What we're actually seeing now is a collaboration between some of the big data providers and car manufacturers. And they're looking at trying to develop tools in which you, the consumer, would own your score and be able to take it from one insurance company to another, so you don't have to start all over again. We're seeing things like smart devices, which we heard about earlier, Apple Watches, Fitbits, etc., that can provide an insight into people's daily activities and can be helpful when you try to develop a health assessment. We've seen other things such as electronic video camera doorbell systems like Ring, where insurance companies are providing discounts to policyholders if they sign up for such services. There are home heating systems that are connected to your smartphone so that you can monitor the temperature in your house in advance and hopefully avoid pipes freezing and causing more damage. So insurers are giving discounts to people that are signing up for these types of products. And as I mentioned earlier, they're also investing in these products. They're trying to learn more about how these tools can be helpful to the consumer and how it can be helpful to the insurer to minimize their ultimate payout. And so I touched upon big data very briefly within the issues of telematics, and we're seeing this rapidly develop. And I think insurers are starting to use this in order to help with rate making, underwriting, claim settlement, and other insurance functions. So with the emerging data use and predictive analytics, insurers using these complex models of marketing and pricing are going to further engage policyholders throughout the life of the insurance product. Insurers will build stronger customer relationships through greater interaction with their customers for risk management purposes. But the challenge that many people have expressed is that having all this data doesn't necessarily mean that you can effectively use all the data. However, AI, artificial intelligence, and machine learning is turning that big data into powerful findings and intelligence. But one of the things which we have to do as a regulator is make sure that there are no rating factors being used either directly or as a proxy, which may violate or harm consumer laws. Many of these new data-driven rating models call upon a non-traditional insurance skill set, such as data scientists and coding analysis. So at the NAIC, we have a big data working group that is looking at the use of models and predictive analytics and trying to determine if any regulatory changes or enhancements need to be made while looking for ways that big data could be used for potential harm. So earlier this year, NAIC's membership approved a new strategic plan called State Ahead. And it really kind of updates our framework and tries to kind of go to the next step and looking at the 21st century. The goal is to give the state regulators the tools, the talent, and the technology they need in order to make informed regulatory decisions. It's all about empowering the members and their staff. Basically, it's designed to capitalize on various developments, and it's really about making sure that the state regulators can address the real challenges in today's world, whether it be cybersecurity, systemic risk, or global pressure from international standard-setting bodies like the IAS or the FSB. So for the next 3 years, this will be our roadmap. This will guide the NAIC and as an organization to better adapt and change and better serve the state-based insurance regulatory scheme. So I've touched upon 3 main themes: safe, solvent, stable markets, consumer protection and education, and superior member services and resources. The goal under the first item is really to provide regulators with the data, training, and tools necessary to support a collaborative regulatory environment that fosters reliable and affordable insurance products. And what we're going to do is optimize the data that NAIC gathers and use it and we're going to develop some new predictive analytic tools. We're going to make smarter and better use of our financial data that we already collect. which is both public and confidential filings from the companies. We're implementing new business intelligence software to access data across multiple information systems, and we are planning on enhancing our existing analytical systems for predictive analytical insights on solvency concerns. So we're using big data ourselves as the regulators to understand and better monitor financial position of insurers. Our second goal really kind of looks at things like macroprudential surveillance, and I'm not going to touch upon that today. And then also looking at consumer protection and education. We understand the importance of competitive markets, and that really kind of relates back to the InsurTech issues, because we want to make sure that consumers have access to these new products, but at the same time we have to make sure that, as Carlos noted, that the companies are solvent and that the consumer protections are there. So those are critical components. So here I'm going to just touch upon, to close out, on kind of highlighting one state in particular. I'm joined by Commissioner from Missouri here, but I'm going to focus on Connecticut today. And Connecticut has really been one of the technology hubs that we have in the U.S. That's the beauty of the U.S. system. We have 56 members of the NAIC, the 50 states, District of Columbia, and all the territories. And all of them are really kind of incubators in their own right. You can try your product, your new innovation in one state, and then kind of try it in the other ones. Kind of start small before you go big. And Connecticut really has been partnering with InsurTech companies, MedTech, and other Fintech related companies, and they've invested $2 million this year in various companies. So they really kind of want to be a center of InsurTech for the country, to be honest. And what they've done is they've invited startup technologies to locate in Hartford, and they're providing them with some support and guidance. And really they're trying to make sure that they're a receptive regulator to these different initiatives. And here you can kind of see the different types of activities within the ecosystem of the Hartford InsurTech. So there's a lot of different activities, a lot of different organizations that are part of this. It kind of cuts across the various different areas, whether it's P&C, health, life, annuities, retirement. It's really all encompassing the different areas that they're trying to be engaged in. And they're working with angel investors, venture capital firms, etc. And they're partnering with mentors who can help them. So I'm out of time, but I'm just going to leave I believe you have these available for you. Just kind of see kind of what they've done year to date and what their progress has been. And I look forward to kind of discussing with you kind of more in our moderated session. Thank you.
Muchísimas gracias,
Thank you so much, Mr. Sarter. We will now ask the moderator that will coordinate this panel session, Ms. Andrea Keenan, the Executive Director of Relations with the Industry of AM Test. As a Senior Director of AM Best Rating Centers with a venue in New Jersey, she is responsible for the relations and strategic communications of the company in the insurance and financial services industry in the entire American continent, Canada, United States, the Caribbean, and Latin America. She was before the General Director of AM Best Latin America, where she built and expanded the first Latin American presence of AM Best. Before that, she was the Vice P of Research and Rating Criteria and Training, where she was the head of Strategy Development and Distribution of the industry of AM Best. economic risk and economic analysis, as well as the supervision of rating criteria and analytical training. She currently works in the board of directors of the network of Microinsurance as a vice president. She has an MBA from the Temple University, a master's degree on international relations from the American University, and a degree on international studies from the York College. Ladies and gentlemen, with you, Andrea Keenan.
Good afternoon. Hello again. Buenos tardes. Again, that's all in Spanish I'm going to say. So, Ekrem, you and I, we're in this together, man. It'll be okay.
Perfect.
So this session right now that we are having is going to be a bit of the opposite of the earlier session. So before we had industry and then discussants coming from the regulatory space. Now, the other way around, we have the regulators talking about how they're innovating, how they're approaching InsurTech and what methods they're doing and what their perspective is. And now we get to ask them from the industry side some difficult questions, I hope. And the discussant that will be coming up and helping with creating difficult questions, I'm going to pull up his bio here. So please, if you could join us, Pedro Pinero is Manager of Market Conduct and International Relations in the National Confederation of General Insurance Companies, Private Pension Funds, and Life Insurance, CNSEG. He is a member of the Permanent Commission of the National Financial Education Strategy. He graduated in law with a postgraduate degree in regulation from FGV, I'm sorry, I won't pronounce that school, pursuing a master's degree in international law at the London School of Economics and Political Sciences. So please come join us on stage. So I think maybe I'll join you down there, make it easier. So we have two microphones. Okay, we're good. Just give me one moment. I'm going to put my headphones on. I'm fairly certain you two are going to be speaking in Spanish, Portuguese. What are we doing?
Yo pido disculpas, pero
I apologize, but I feel more comfortable in English, so
I won't make many mistakes, I hope so.
You are outnumbered, Carlos. I'm so sorry about that. So this is intended to be an interactive discussion. We will stay on time and finish in 34 minutes, I promise, because Ekrem has a flight and there is some major traffic outside, apparently. So because it's an interactive discussion, if there are questions, please let me know. I will pause from time to time to make sure that we have the opportunity. And I will also mention that the streaming is amazing. I looked at it a little bit, and I have colleagues looking at it now from the United States. So that's a great opportunity because that's saved as well, and you can share with your colleagues. So the two of us will start with questions for the presenters, but we've heard this morning and from the presentations the list of innovations. You know, it's IoT and blockchain and, and on and on and on, and it goes. And I am quite familiar with the NAIC and the IAIS, less so with the regulatory environment at SUSEP. But I am very aware of what bureaucracy can do to progress and how long it takes to come to agreement. And in the case of the NAIC, for example, the NAIC is amazingly collaborative with industry, and every innovation or any change in regulation goes from the working groups and the task forces and election, and there's opportunity for comment, and there's so much energy into working with the industry so that it is productive, it's positive, it helps policyholders, it helps industry. But with the current pace of what's going on with technology, a question I have for both of you is, knowing that there is a time lag between deciding to do something and actually being able to do it, how do you choose the priorities of where efforts are first, second, third in this space?
Okay. Yo voy a hablar en español.
I'll speak in Portuguese and Spanish. SUSEP is highly involved in including insurance, considering emergent clients in insurance, right? The next year, SUSEP, I believe, will be the institution chairing the educational institution, SUSEP Brazil. So it's a big challenge. Nonetheless, I believe that the first thing that we are thinking about is this, and thus increase the participation of the insurance market in the institution in Brazil, in the GDP in Brazil. From the current 4%. Now, considering the behavior and the prudential analysis, this as a very relevant issue. We know that bureaucracy is high, so today maybe we cannot say how companies should approach businesses. We just talk about the fact that they should do business, but they should do so within the general guidelines that are generally accepted. In terms of regulations from the electronic channels, we said, well, how things should be hired. They just should make sure that something was purchased, that the purchase was actually carried out, and that the person is fully cognizant of that fact. This is the key thing. With behavior and solvency and good market health, so that the market continues to be strong, and so that they are a big player to contribute to the growth of Brazil's economy.
So, Andrea, thank you. Introduction to the NAIC and marketing us so well. Couldn't have done it better myself. But no, I think we strive to be receptive to the working with the industry and really kind of take into consideration what they're saying to us and what consumers are looking for. I think this is one of those areas where things are moving very rapidly, and it is hard to keep pace, which is one of the reasons why NAIC is now undergoing this rapid change through our State Ahead initiatives, and trying to make sure that the regulators have the tools necessary to evaluate the new dynamics. We're meeting with the startups, we're talking to incumbents, and I think we're trying to see if there are specific rules that need to be changed. We've explored the issue of sandboxes, but to date we haven't needed it necessarily because we already have so much innovation in our states, because our laws are generally flexible enough to accommodate a lot of this technology. And where it isn't, I think there has been a willingness by the states to explore changes that are necessary. And I think some states are more tech savvy than others, and we do see differences among the states, but I think that's the beauty of our system, is that you can go to certain states that have those innovative InsurTech type hubs and receive support from those states, and it's part of the economic development for those states. And then you can take it from there and go national or global even.
Thank you. Not to have Pedro not do his job up here on this panel, so it's your turn to ask some questions, please.
Thank you. I think first I would like to make an introductory comment about what we saw from the two regulators that presented here today. I found it very interesting that I think we're seeing a very swift change in the regulatory approach to innovation, but actually to everything else in the insurance industry, because we started off with a more wait-and-see stance from the regulators. They were waiting for the market to come up with innovative ideas and products and come to present these ideas to them so they could analyze and approve them. And then we moved to this more receptive approach. And the NIC regulator spoke about it, making sure that there's a receptive regulation to the new players in the market. And now we're moving forward, I think, to this more active, fostering approach from the regulator, to the point that, again, the NIC regulator said that they're trying to create impulse to innovation. And that's really the regulator working together with the market to better serve the customer. And I think that's one of the main roles of the regulators, and it's really good to see that. But on that note, I would like to ask you, and I'll go back to one of our associates who was here earlier today, and he said that if in 10 years the market is not able to simplify its language so it can be understood by the customers, then we will not have done our jobs. And I would like to, so under this new regulatory approach, I would like to ask you, how do you think you can help the industry tackle this challenge of simplifying the language of insurance so it can be understood by the customers?
So I think that's simple contracts is never easy, especially in the United States, where you can't go 50 feet without running into a lawyer. So we're a very litigious society. So I don't know how we're going to simplify contracts, to be honest, because there are so many nuances in them, but I think we have a duty to explore that idea. I think I would actually take it a step back and say it's not necessarily the obligation of the insurance regulators to do this, but it's in fact at a higher national level, at a Ministry of Education, that you really need to be educating children in grade school about insurance. And you have to educate them about the importance of this so that they understand why they need the different types of policies. And I think that's probably one of the keys that is here. I think you can make it easy for someone to buy insurance and understand and try to filter the policies. And for instance, there's a life insurance quotation site in the US called Policy Genius. You put in your information, how much life insurance you want to buy, how many years you're thinking, and what your budget is. And it will tell you if there's any policy in that. But then it shows you what is available in the marketplace, and you can then filter. And it will then give you a very short summary of what are the main benefits of that policy. But, and I did this recently, I purchased through them, but then afterwards you get the actual contract, which is 50 pages long. And I didn't read it. I don't think many people do. It's, you focus on the cover sheet that tells you what are the main benefits. But buried in the 50 pages, there may be some poison pill in there. But that's where the state regulators and regulators everywhere come in to make sure that those contracts don't have those provisions. But technology will help, but I think we have to educate at a younger age about the importance of insurance, and that combined with technology can make it easier, I think.
I believe that the way out is the same. Financial education from grade school. Kids should learn what is insurance all about, what is provided by a coverage, and what not. And there's another side to this as well. SSEP started this innovation committee on InsurTech in 2017. This committee is one that is a permanent committee. And under the scope of this committee, there is something underway facilitating the terms and conditions of insurance, which in Portuguese cause a lot of misunderstanding. People generally understand them in double or three different ways. In Spanish, we call it prima. In English, you call it premium. But, well, premium may be similar to another word in Portuguese that's called premium. But in Portuguese, premium is an award, something that I'm granted as an award, rather than something I pay. And so people don't understand because of the terminology. So we are doing this type of approach or education with the market, discussing this type of things with the goal of improving in mind. And also, SSEP is highly concerned with the progress of technology. They want to be quickly enough in order not to trip in the effort, so as not to have to make a sudden stop of technology by removing any hurdle down in the path of technology, so that the industry of insurance will develop smoothly and will be able to progress, not at the expense of SUSEP's fault.
Certainly we're concerned from the regulatory standpoint, would be concerned about consumer protections and data and privacy. Another remit of most regulators is that there be access to insurance. So my question for both of you, and maybe all three of you, is InsurTech, is this technology perhaps the key to providing more access to insurance? We're talking about financial inclusion in this forum, and we've talked about the challenges struggling with the technical details of what it means to have InsurTech and what that means about who you're regulating, and that in this case we're talking about low-income consumers who, like you said, the language differences, availability of information. What is it that InsurTech can do to really, along with the regulators, to really help improve access to insurance for the poorer communities, especially in Latin America?
Okay.
Brazil is a very large country. We have lots of differences between the north and the south. think that InsurTech understood that the language has to be different for each consumer, for each customer. And as it is a continental country, technology can reach customers in a way that the other means cannot do that well. Many people in Brazil do not have a computer. They do not have access to the internet. But they do have a mobile phone with internet. And they understand the language of technology. Even those people that are the poorer, they understand the language of technology. And it's very simple for them to take out an insurance policy over their phones and to have a contact with a broker that perhaps is not very interested in selling an insurance with a small premium. So this is the first thing that technology, I think, will give access to digital inclusion.
So I think what Carlos just said is true, that you're going to find with, especially using cell phones through Latin America or Asia, for instance, there's been a much greater uptake of selling insurance through those technologies. I haven't really seen that in the US really come about yet. I'm not certain exactly why, but it might be partially because our market is more developed to date. But talking about brokers and not wanting to sell small products, I think that is common, though, in the US too. Many of the brokers will only work with high net worth clients, and the average consumer, if they want to get an independent quote from multiple companies, it's harder for them to identify someone who can do that for them. Whereas using these InsurTech technologies, there are various aggregator websites and comparison sites that have sprung up, and those are making it more easy for you to compare. There's a car insurance company, car insurance aggregator, that in the US, at least in Virginia, that I can put in my mileage and my information that I'm on average driving, and then it will compare with all the companies in the area for quotes. And the cost for me, nothing. They basically get paid from the insurance company. They promise to save me money or I don't buy. And then they'll, every quarter or every 6 months, they will review who's the best pricing for you every 6 months. And that should spur more competition and more and better pricing. That's the goal ultimately. And hopefully that does work. And they say they'll take the hassle out of changing insurance. They'll contact your current insurance and say, your customer is leaving and going to this company. And they'll handle all the paperwork for you and make it easy. If you make it easy for a consumer, they'll probably sign up for it.
I don't know if we still have time for another question from the panel, or if we should hand it over to the floor.
Please, go ahead.
Okay. Well, I'll stick to the inclusive insurance topic, but I'll go back to the regulatory approach. And So that's the approach to microinsurance, which used to be the name of of what we now call inclusive insurance, has been different in different parts of the world. Some countries felt like they should just study the subject and leave it to the market to develop the products and just approve them as regular insurance products. Some countries like Brazil decided they needed a specific microinsurance regulatory framework, and they dedicated a lot of time to develop that. In our country, the case was that the existence of the microinsurance regulatory framework didn't impact the market as much as we expected it to, even though there's a market being developed. There's a lot of products that could be qualified as microinsurance that are still that have been sold outside the framework and that have not merged into the framework after it's been issued. Nowadays, there's a discussion that we might not need these types of frameworks because what they address mainly is distribution. Some of them address product design, but that's addressed in all the different, in the standard framework. So what I would like to hear from you is, and here we have a regulator. I don't know if any of the US states has a specific microinsurance regulation, but I would like to hear from you too what I would like to hear from you too is if you feel like there's still space or is there still need for a specific microinsurance regulatory framework, or should we just talk about insurance and simplify distribution channels, product design, and all the aspects of the operation?
So I'm not sure if any of the US states have a microinsurance specific regulation. I haven't heard of any, but we're seeing more simpler products emerge where you can get on-demand insurance, for instance. Say I need to rent a car, or I'm renting a car and I would get the insurance from the rental car company. That's been around for a long time, and you would get it for those 2 days. But let's say you're renting an Airbnb apartment and you want to basically have insurance for that. You can get it for that short duration. Or you can get coverage for your cell phone when you travel overseas, but you can turn it on and off. So those are simpler products with a lower premium, and they're web-based and cell phone-based. So I think there are the new technology is helping democratize insurance to a certain extent, have it available to everybody. But if you don't have the access to the internet, then that is a challenge. And I think something that Japan has indicated they want to explore next year as part of the G20 agenda is what is the impact of Fintech and InsurTech on aging societies? Because if everything is moving to the cell phone or the internet and your elderly parents don't know how to use a cell phone, are they being left out of these opportunities? So there are a lot of consumer protection issues around aging society as well that we think InsurTech is going to be the savior potentially, but it may actually be causing more problems in another area. So I think we have to kind of watch this space, and that's where the partnership between industry and regulator is going to be key, and explore this in the coming years.
What happened in Brazil when we had this microinsurance was very important.
No fue como se esperaba.
But it was not as we expected. Because we have insurance coverage where we earn profits. There's nothing like insurance without a profit. And therefore, perhaps today we're just going to talk about insurance because technology is reducing costs. And when costs go down, the premiums go down. And some risks that were not covered because there were no profit now are covered. I think it's important. Inclusion is going to do a lot based on technology. Of course, we have the elderly people that do not use technologies like mobile phones, but we have other channels to reach them. But the efforts in microinsurance have to continue. It's very important. It's a very interesting area because we will have more inclusion with cost reduction, but anyway, we have, as regulators, we have to think and try to reduce costs for this kind of insurance. And now the SSEP, the superintendent, is working on a new regulation for us to have intermittent coverage and insurance where we can offer coverage for very short periods of time. As he said, I can activate coverage now, but then it's off immediately for one day, for a few hours, and this is also going to reduce premiums. And we might offer this to people that do not have or cannot afford a one-year insurance coverage, for instance.
So regulation is the path to inclusion. That's what I heard there. Earlier in our pre-panel, you were saying technology is also the path to inclusion. So it's a very hopeful message that you're bringing, which is fantastic. The big green clock is telling me we only have 5 minutes left. So before we monopolize the time up here, ¿hay algunas preguntas? Are there any questions from the audience or even shared experiences of how regulation has been helping with in other jurisdictions in Latin America? Did you have another? Yeah.
I'll go ahead then. So one subject that's really interesting and is a burning issue in the market right now, and that Carlos brought in his presentation, is this intention of SUSEP overseeing the market through electronic means, so it's creating an electronic supervision system. And then the NAIC representative also spoke about their plans of, the state ahead plan of optimizing the data that the NAIC gets. So I understand this is a trend all over the world, and I see that there's a delicate balance between the amount of data you get from the supervised entities and the quality of the data and the privacy protection of customers if you require that kind of data. I would like to hear more about those projects in the US and in Brazil and how you plan to look at those issues.
So we've been collecting data in the US for a long time now. We're not collecting anything new necessarily as part of our project. What we're doing is better analyzing the data. And we don't collect data at the individual policy level, at the regulatory level. That's aggregated on claims basis, but we don't collect individual data, for instance. But privacy issues are definitely front and center, and I think we're going to see more concerns about that, but more on the consumer side than the regulatory side.
Now we've had an approval of a law. A law has just been passed, a law about data. And the law is very similar to Europe's approach. And so now we are trying to adjust and adapt all these approaches. We are conducting some studies on big data for the analysis of the insurers' behavior. But the monitoring of the insurance companies has been specific, focused on data exchange. We have the insurers sending data on the policies with all the projections of all the individual data. We just send information of the policies so that we can start by controlling capital for these work projects. This assurance is for work projects. And then to verify the reinsurance that is connected to this kind of policies, because we have a solvency problem if there's not sufficient reinsurance for this kind of policies. So we started with this project, but only with information about the insurance company and capitals. And then we are moving in other fronts. Perhaps we're going to cover car insurance, but now we're only focusing on this specific kind. Just one more thing. At the SSEP, we are highly involved with this issue of the digital technologies. And we are trying, perhaps, to focus all the efforts in Brazil, all the efforts from all of Latin America for the development of technology. So we are open to discuss and exchange experiences. So we can exchange experiences as to how these changes are happening in the countries, because we see that many things will have impact in other countries.
So in listening to the discussions we've had, we've heard that regulators need to help provide access to insurance, financial inclusion, anticipate technology, know all the current players, get to know the upcoming players, the next lemonade, the next generation of many players. We didn't even talk about the MGAs that we would have loved to get into, which is a whole other category of something between distributor and insurance company. Monitor and inspect, and all the while not get in the way of the private sector. So I do not envy the position of the regulators. I admire it and appreciate it, and hopefully in these forums we can, there are many people here enthusiastic about applying what we're learning towards financial inclusion. So plenty of ideas to go around, and hopefully with the next session we'll be able to talk more about that as well. And for now, ECRIM has a plane and some traffic to fight, but and we have a coffee break after this, but thank you very much to the panelists. I really appreciate it.
So a round of applause for Andrea Keenan, the moderator, the panelists, ECRIM's Hartford, Carlos Goncalves de Almeida, and Pedro Enrique Fernández Pinheiro. As Andrea said, we invite you all to the coffee break, and after that we'll go into the final part of the day with the working groups on regulation for innovation led by Stephanie Zinsmeyer. So we invite you to share the coffee break on the first floor, and please fill out the evaluation forms, if you can do it right now or for the coffee break, and then you can give them to the ladies at the back of the room or just leave them on the tables. This is very important for us to know your opinion. Thank you very much.